First of all, why selling is also called as writing.
Yeah.
There is a buyer and there is a seller. Option is nothing but a contract, right? Be it a call or be it a put. How I identify whether there is a strong rally and from there the stock is showing signs of cool off. ICICI Bank on the weekly time frame chart, the prices have gone up significantly. The seller of an option, okay, he has an obligation to deliver.
Hello everyone and welcome back to the channel. This is Nimisha and we have Zubin with us. In this particular video, we aim to learn about how to sell calls and puts in options. But did you know that selling is also known as writing?
Yes.
Even I was unaware of it and let Zubin throw some light on it.
Okay. So, first of all, why selling is also called as writing.
Yeah.
So, even in a call or a put, it's an option contract. There is a buyer and there is a seller. All right. So, option is nothing but a contract, right? Be it a call or be it a put. So, the buyer gives premium to the seller and seller actually writes down the contract. So now what we have to understand is when would a seller sell a call option and when would a seller sell a put option. Okay. So generally, when the seller expects price of the underlying asset not to go beyond a particular price, okay, not to go up or not to go down. If the seller expects prices of an underlying asset not to go up, let's suppose the price of a stock, has risen sharply. All right. Now, how much the stock price has already gone up by around, say, let's say 10 to 15% within few days.
Yeah.
Now, there is a little scope of prices to go up further. So, from here, a person, a trader expects that, the prices can continue sideways or it may turn to a downtrend. So, in such cases over here, a trader can decide to sell or write a call option.
Okay.
Okay, so if his view is correct that the prices did not go above this particular level over here, then the entire premium he would get to pocket it up.
Yeah.
Correct. So let me help you, with some example. Let's say, so coming to this particular strike platform, first of all, how to identify, how I identify whether there is a strong rally and from there the stock is showing signs of cool off. So for that, we can look at the momentum indicators that, the momentum indicator after a nice rally in price, it has given a sell. So what I generally do is on this particular strike platform, there is a RMI scanner. All right. And in RMI scanner, in the basket of F&O stocks, there is a daily time frame chart and the weekly time frame chart. I will select new sell signals on the daily time frame chart. And on the weekly time frame chart, I will select sell and new sell both. All right. So out of all the F&O stocks, I got filtered 3 stocks. And in these 3 stocks, if you can see ICICI Bank, all right, ICICI Bank on the weekly time frame chart, the prices have gone up significantly. There is a big rally already, and now the prices are coming down. So one thing I don't know whether this since the weekly RMI is still in a sell mode, it may go down further or not. It may also find support over here. But I know that it's still 10 days to expiry. If there is a bounce back also, there is a less probability of prices to go above this median line. That is somewhere around 1275, let's say 1300 to be on a safer side. All right. So what we can do is we can sell 1300 call option. Now how you can just open up a new thing over here and say ICICI Bank, and in ICICI Bank you look up the option chain. Okay. All right. So in the option chain, you can see that the 1300 call is trading somewhere around 4.85 rupees. Let's round it off to 5 rupees. So now if I want to sell this call, the question is how much money will be required to execute this contract. So understand, the seller of an option, okay, he has an obligation to deliver. Correct. He is an obligation. He does not have a right.
Yes.
So what does the exchange say is that if you are a seller, if you are a writer of call or a put, you have to pay the some initial margin, okay, to the exchange. Only then you will be able to execute this order. So what is this margin? Generally the contract size. Okay, generally 10% of a contract size is the margin required.
Okay.
Meaning what? Contract size is nothing but the lot size 700
Okay.
multiplied by 1300, that is the strike price.
Yeah, strike price.
So this will come to somewhere around roughly around 10 lakh rupees. Okay, now 10% of 10 lakhs is 1 lakh
1
rupees.
lakh.
So roughly around 1 lakh to 1 lakh 20,000 rupees. Okay, also depending on the volatility of the market, the margin increases or decreases time to time. That exchange takes care of. But roughly understand you will require 1.5 lakh rupees margin to sell this call at 5 rupees. Okay, now imagine you have sold this particular call. Now what will happen is prices, if my view is correct, prices comes up a little bit but does not go
Cross
beyond
1300,
1300.
yeah.
Then this 5 rupees premium will become 0. And 5 multiplied by 700, that is 35,000 rupees I will get to keep. That would be my profit. All right. So the initial margin, that 1.5 lakh rupees that was deposited before executing this contract. All right. What will happen is from that 35,000 rupees profit will be added to that margin, and that total margin will be released to me.
Correct.
All right. So initial margin paid, and after squaring of the contract, the margin received back. The difference between that will be my profit or loss.
Yes.
Okay, and when will be my loss? My loss will be if I go wrong.
Yes.
My view was prices will not go beyond 1300. So my view went wrong. In that case, if prices goes above 1300 plus the premium paid 5 rupees, so above 1305, my loss will start.
Yes.
But as an option seller, I have a choice to put stop loss.
Yes.
So as and when if I feel that it is increasing greatly, swiftly, and I am completely wrong, you can always choose to put a stop loss and exit from that particular option contract.
Correct.
All right. So did you understand when to sell a call option? Okay. Just like that, opposite of it. When you see that the prices of a particular stock is decreasing, it has decreased drastically. All right.
Yeah.
And it is nearing some support level. So from here, the trader has a view that, okay, I don't know whether the stock will bounce back or not. But I feel that there is a very high probability the stock will not go beyond this support level.
Line. Okay.
So an options trader, what can he or she do? This support line, wherever the support line is, that strike price you choose, and you look at the put premium. You can sell a put over here.
Yes.
Okay. So how to understand whether the prices have gone down
by looking at
or whether there could be a bounce back or not from here. So just like that, you can go to this RMI scanner. So instead of new sell, we will look at new buy. All right. And in the weekly time frame chart, instead of sell and new sell, we will look at buys and new buys. So we got a list of around 4 stocks. And from these stocks, what can be done is you can see whether after a nice downtrend, is the stock bouncing back? Yes. So over here, Britannia Industries on the weekly chart, I don't know whether the prices will go beyond this resistance or not, but it's a good it's at its good support level over here. All right, there is a good support level over here. Or let me also find out some better stocks which has given a good correction. And all right, so Britannia was the best from this lot. So Britannia current price is 4,905.
Yes.
Let's say the low over here, the support level is at 4,650. All right. So our view is that we don't know in next 10 days the Britannia industry will bounce back or not. But there is a high probability that it may not fall beyond this particular support level, 4,650. So what we shall do is we shall open up Britannia Industries. You can look at options page, and in this options page you can simply go to option chain, and 30th January expiry 4,600, right? So 4,650 put option, 4,600 put option is trading at around 12 rupees. So again, roughly around the contract size would be mostly around 10 lakhs approximately, and around 1.5 lakh rupees margin will be required. Margin will be required to execute this put short. All right. So lot size is 100. So if my view is right that Britannia prices did not fall below 4600, then this 12 rupee premium of this put option will become zero, and 12 multiplied by 100, that is 1200 rupees would I will get to pocket up. Clear, right? And if I go wrong, how will I go wrong? I
If
will
the
go wrong
prices
if
go
prices
below
go
the
below it, their
support level.
prices crashes. So if I see that prices are crashing and my view is going wrong, I can always decide to square off the option before the expiry.
Yes.
Put a stop loss somewhere and then exit the position. All right. So I hope you have understood the seller's perspective. All right. And one more thing that you can confirm, when to sell a call and when to sell a put is something with there is a concept called as OI, open interest.
interest.
All right. So in the same strike platform, you can look at the open interest and you can say combined open interest. What are all these things? Of course, we have made a video on open interest, and in that detailed explanation will be given. So you can see that this green color call, the open interest is highest. So 5,000. So when the call open interest is highest, it means that this is providing a resistance. And you can see that 4700 put option open interest is very high. So instead of selling 4600 put, a trader can also decide to take a chance and sell 4700 put, where he will get some more premium.
Yes.
Okay, and the view is correct. The price of this particular stock does not fall below this. So these lines over here, they act like borders. These big lines over here, they act like borders. So prices are expected to stay within those borders.
Yeah.
All right. So when to sell a call, when to sell a put, I hope I've fairly given you a explanation.
Yes,
Yes.
indeed. Thank you so much, Zubin. And I have learned where and how to sell a call and how to sell a put. And well, that writing thing was very interesting. What have the viewers learned? Let us know in the comments. Like and share this video, subscribe to our channel, and press that bell icon so you do not miss any other update that we are coming up with. Go and use our platform web.strike.money. You also have 7-day free trial period. Over there, you can see how easily Zubin has shown us how to look at the charts, how to look at the open interest, and it will make your trading journey very easy.